Let's start with that Intel story, though, because it is a fascinating one. Brian Sozzi, you've been covering this closely, and you knew that Intel was making an announcement. We didn't know what exactly they would be saying. Intel has had a lot of push and pull, right, in terms of external and internal forces that have been pushing it in different directions in terms of its strategy. CEO Pat Gelsinger, who had been at the company, returned to the company and actually doubled down on some of what some critics of Intel had been pushing it away from. That is the foundry business, making chips for other companies, at the same time that Intel has also got to fix its own chip making business for itself. So it's got a lot to get right here in terms of execution.
All right, Julian, it was fascinating to watch this event that started at 5 p.m. yesterday. And if you're an Investor Day geek like me, this was more exciting, I would say, than the reveal of a new iPhone. You had Pat Gelsinger just in the month, the top CEO job here at Intel, in that role for about 1 month. And he came on there last night and he was on fire, sounding like an executive that has been at the company really for the past 40 years. Obviously, he left in 2009 to be the CEO of VMware, just returning a couple months ago as CEO of Intel. But the big headline here, Intel investing $20 billion to build 2 fab or chip-making plants in Arizona. And Gelsinger pulled no punches on this call, Julie, last night, saying Intel remains committed to making its own chips. I would say pushing back to a lot of Wall Street critics and also Third Point's Dan Loeb, who was agitating for the company to explore alternatives, which included potentially getting out of making its own chips and outsourcing that business, saving money, and likely plowing back into dividends and boosting the stock price. Gelsinger said, no, that is not going to happen. But Julie, as I was watching this, I was surprised that there were 2 cameos here. Not a lot of people expected it, but Microsoft CEO Satya Nadella hopped on the call last night, as well as IBM's new CEO, Arvind Krishna, both voicing support for Gelsinger's initiatives. Here's what they said.
As chips become more specialized and cloud architectures become more optimized for new workloads, we will need to collaborate to co-design the next generation of systems, from the hardware to the systems to the software.
The technology is driving the next technological revolution: hybrid cloud, AI, 5G, the intelligent edge, quantum, are all together going to help unleash the potential of data and advanced computation that will create immense economic value.
And Julie, I'm looking forward to catching up with Gelsinger later this afternoon. We'll have more from that interview later on here on Yahoo Finance. But not lost in the optics, at least to me, Microsoft CEO, IBM CEO, obviously no Apple CEO Tim Cook. That relationship was essentially ended late in 2020 as Apple is now making its own chips called the M1. Now, Gelsinger did mention on the call, though, he is open to pursuing opportunities with Apple, whatever that means. But I'm really looking forward to catching up with Gelsinger later.
Yeah, one would think he's open to opportunities because presumably it wasn't Intel's decision necessarily to end that relationship. So we'll see what happens. But meantime, the ripple effect that we've seen across the industry has been really interesting, because what Intel is doing with this move, it's going to more squarely compete with the likes of Taiwan Semiconductor and Samsung. We've seen pressure on those stocks. And, if they're building out new facilities, they're going to need equipment. And so we've seen a lot of the equipment makers get a boost from this announcement as well. To your point, sort of illustrating the size and importance of what Intel and ambition of what Intel is planning here, the effect on the rest of the industry.
Right, and worth noting here, it's not all sunshine and roses with Intel, with his investor day yesterday, mini investor day, I would say. They came out, they said they would beat first quarter guidance because of continued strong notebook demand. So likely you're probably also going to see good quarters out of HP, out of Dell. Those trends continue as we all continue to work from home. But they lowered their full year guidance about 20 cents below where the consensus was as they invest these billions of dollars to build out these manufacturing plants. And there's still a heavy skepticism on Wall Street, at least out this morning in terms of the notes that I was able to read on whether Gelsinger can pull off this turnaround. He's going to spend a lot of money trying to do it. I think Wall Street is open to giving Intel another shot. They've tried this type of turnaround before. It really just boils down to execution.
Yeah, well, so TBD then on that front. Just to broaden it out to bigger tech for just a moment, Brian, because this is obviously something you and I and Miles have been talking about a lot, is about the rotation out of tech and into the so-called reflation or reopening trade, whatever you want to call it. We're sort of at this point now where we're trying to figure out if we're at an inflection point where that's going to reverse, or if we're just going to continue to see some back and forth there. I mean, yesterday we saw some declines for the NASDAQ, but in recent days, it seems to have gained a little bit more traction. And of course, at the same time, yields have stalled out in their upward march. So that certainly doesn't hurt matters. But, you know, I know you read a lot of notes out there. Is there any kind of glimmer of things changing?
No, it has been interesting. The move in tech that you mentioned, Julie, has really been, I think, focused on this pullback in yields. With yields have crept down, as you see Fed officials like a Jerome Powell talk down the effect or the impact. We're going to see rampant inflation because of new stimulus plans, as they have done. So I think that's where you're seeing tech reawaken. But at the end of the day, I think for a more strong or just a stronger trend here in tech stock, you're going to need to see first quarter earnings. Because that is when the comparisons for a lot of these big cap tech companies are at their strongest for the year. And it's when you could see the strongest growth decelerations for a lot of big cap tech names. If they could come out here, beat handily on sales, beat handily on earnings, it would go a long way to, I think, reawakening the big cap tech trade.
Yeah, and in a little while here, we're going to talk to Sean Darby of Jefferies, who predicts not only a consumer spending increase, but also a corporate spending increase. Intel, obviously, an example of that. I'm curious, we'll get his take on what that means maybe for other tech companies as well.